Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 16th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, what do you have on tap for us today?
Yeah, I want to take a look at Urban Outfitters, TJX, and software maker Snowflake.
All right, well, let's start with Urban Outfitters, which is scheduled to release Q1 earnings on Wednesday, May 21st. Earnings for the retailer are expected to rise 20% to 83 cents per share, and revenue is seen climbing 7% to $1.29 billion. And here's why we're watching Urban Outfitters. We'll be looking for any insights into tariffs and any potential responses amid ongoing changes. So, Ed, Urban Outfitters reported record sales and net income in Q4, but Barclays analysts lowered their price estimates ahead of earnings, citing high inventory levels, escalating demand uncertainties. And, again, it's just feels like there's a lot of anticipated pressure on the economy here with the tariff picture. So, what are your thoughts with Urban Outfitters here ahead of next week's report?
Yeah, Urban Outfitters has been doing very well. It had accelerating growth in earnings for a couple quarters, picked up on the revenue side, the best in a while, the growth. So it's been doing very well. Well, some of its peers have not. It's more mixed. Yeah, it's really about tariffs. It is odd because it's like, depending on where all their sourcing is, but even if they don't source, like from China per se, they can source from other places that are still being affected. 10% baseline tariffs and even that is a pretty big deal. Their profit margins are only so high, and you're going to see it pass things passed on. So how much is that passed on? How much of that, and what does that reverberate? What else they can do to minimize that impact, and how they expect consumers to handle it? These are sort of trendy millennial type things, and maybe they can skate through. If you can pass on the cost, they will. So very interesting report from one of the top performing retailers right now.
And you're right, there's been a lot of focus on China, but I think a lot of retailers have clothing made in other Southeast Asian companies. Vietnam comes to mind. And we already saw Walmart report earnings and say that they were raising prices in response to tariffs. So it will be interesting to see what other retailers like Urban Outfitters have to say. But let's take a look at the chart because this one was in consolidation with a 61.16 buy point. Urban Outfitters peaking above that buy point on today on May 15th. And so again, what are your thoughts here with technicals with Urban Outfitters?
It's acting well. It's got a RS line blue dot, which means it's at a new high. And when that happens, as it's breaking out, or before a breakout, really positive. Volume has been strong this week. Maybe not today, but generally there's been some strength relatively, especially after pausing for a few days. I think on Monday, on Monday when it blew by 55, that was a place where you could have entered. Now you might have thought, well, I don't have much time to build a cushion. As it turned out, maybe there is. It is a 10% cushion. Doesn't mean that'll be enough, but that's usually what we think of as enough. So that might have been the better place to get it. Hard to do right ahead of earnings. It may be working out. Ideally, this would pull back and form some kind of handle or at least pause. Don't know if that's going to happen, especially with the market. The market doesn't want to pause, so it's hard to get stocks like that. So that would be the only thing. You could buy it on earnings or with an option play ahead of earnings at this point, but it may not provide a great opportunity, but it's definitely one to be watching.
And I'm just switching over to the weekly here, Ed. And as you mentioned, great accelerating earnings growth here over the last few quarters. That looks like it may be slowing down a bit, but we can see tougher year over year comparisons here. Pretty solid sales growth in the single digits here, though. Any other thoughts on the fundamentals here with Urban?
Yeah, the sales growth has slowed a little bit, but yeah, it's just generally been really strong performance, and uh, you know, they've obviously been growing their margins. Yeah, that sales growth that low, and they keep on having big profit gains, so there's been margin up. So maybe they can squeeze out a little bit, uh, but uh, but I think things are going pretty well.
And just because we're talking about Urban, reminds me of another retailer that was a big winner here. That's Abercrombie and Fitch, but we can see it's really pulled back here over the last several months. So, any thoughts? Just trying to compare some similar names in the industry, but any thoughts here on Abercrombie and Urban?
I mean, you just have to put your junior high or high school hat on and just think how embarrassed you would be if you bought clothes at store X as opposed to store like Abercrombie was very hot. Obviously, things are coming down. I mean, I'm not saying that the closing on a trend, but there's definitely some retailers, youth apparel chains or adult apparel chains like that come in and out of favor as fashion and as stocks. And this one clearly is on the downside. And the fundamentals are weaker now. After amazing growth for a couple of years, it's supposed to be down this year. So that's what's hitting it, is that the growth isn't there anymore.
All right, well, let's move on and take a look at another retailer. That's TJX. That company is scheduled to report Q1 earnings on Wednesday, May 21st. Earnings for the retailer are expected to fall 2% to 91 cents per share, and revenue is projected to climb 4% to $13 billion. And here's why we're watching TJX. Again, as you said, it's all about tariffs, and we're going to want to pay attention to any commentary on that front. And Ed, in Q4, the off-price retailer reported yet another quarter of strong growth to cap off that fiscal year. Analysts expect sales to grow again this fiscal year, but what's on your radar with TJX?
I mean, TGX has been a real strong performer for a long time. Their discount growth, it is odd as a more defensive play. It may not go wow if we get into a really aggressive bull market. On the other hand, if there's tariff relief, that's a positive too. Now they aren't necessarily that directly affected because most of what they do is close out stuff, or they get stuff that other people can't sell. But if other retailers can't get inventory, or if other retailers are raising prices, I mean, it's definitely related to how their pricing, their sourcing is going to be, even if it's not directly affected. So this has just been a strong performer, especially on, solid earnings performer. The revenue growth has just been okay lately, but been doing quite well.
And let's take a look at the chart, Ed, because as you said, this has been a great performer. This one broke out back here in early April, pulled back sharply, but reversed higher. It's still in that buy zone, but this one's looking pretty, not too much extended from the 50-day line, but getting up there. But what are your thoughts here with the chart action?
Yeah, there's that sell off, but a lot of things were selling off right in early April. This is sort of like you can sort of put your thumb over it in that situation because everything turned around. It wasn't really, and you can see the relative strength line was still rocketing during that period. I mean, like even right in early April, when this stock was selling off, that the RS line was going to new highs. So I think you could still use that as valid. And actually on a weekly chart, it has a short consolidation. There's a sort of a 3 weeks tight. So you could probably use that 131.30 as an alternate entry. It was like not quite long enough to be a new flat base, but it was several, sort of several weeks in there. So that would be an alternate entry. Again, wouldn't do anything ahead of earnings. That would be the issue there. And so you have to wait and see how that goes. This is not one, the relative strength line has not been amazing over the last several years. It's sort of gone, there's been a couple of step ups and then going sideways. Now, maybe was this a step up and will go sideways? I don't know. I mean, you're not losing things with this one, but it's just been generally keeping pace with the S&P 500.
All right, well, let's move on to our next name, which is Snowflake. That company reports earnings on Wednesday, May 21st. The software maker is expected to see Q1 earnings up 50% to 21 cents per share, and analysts expect revenue to climb at 22% to $1.008 billion. And here's why we're watching Snowflake. We'll be looking for any commentary on AI uptake and monetization efforts. So Ed, this one again, a big software name a lot of people are looking at. They have a lot of operating partnerships with Amazon, Microsoft, Alphabet, just to name a few. In February, they expanded that partnership with Microsoft. So what are your thoughts here with Snowflake? And it seems like a lot of software names have really weathered this tariff storm over the last few months.
Yeah, obviously software isn't directly affected. There's always the risk that services would get involved, but it's really been about goods. And also the other issue is that the concerns about cheap AI aren't that big of a deal for the users of AI. I mean, it's like, oh, you're telling me that I can do all this computing without paying as much. I mean, that's actually good news. So software, I think, has benefited from that. They weren't as hit by the tech woes and they weren't as hit by the tariffs. They were definitely hit in March and April because the market was selling off, but it's coming back. Snowflake is becoming more profitable. Sort of that's at least on an adjusted basis. The revenue growth is still pretty strong. just have to see, like, are they getting those gains in AI monetization? There's also concerns that there's a rival Databricks, which is not yet public, but is probably going to go public, especially if the market stays strong. A lot of people are expecting that in the coming months. So that would be something that could be an issue, but Snowflake is definitely bouncing back.
And let's look at the chart because we can see that recovery here in a cut base with a 194.40 buy point ahead of earnings, Ed. So, what are your thoughts here with the technical action? Is this another one that's kind of in no man's land until earnings approach?
Yeah, I mean, it's sort of in no man's land anyway, because it's sort of well above the 50-day line. So if there's any kind of early entry that you might have done, that's over. It's always possible it could pull back and form a handle. It's pausing, but because the market just isn't pausing, it's hard for it to actually show any kind of shakeout. That's not going to shake anybody out. I mean, anybody who bought that is going to be fine. That's fine. It'd be great if it could form a handle, but it just seems, it doesn't know if that's enough time to do so. So look to see what happens after earnings, unless you want to do an options play. But this one could move a lot. You can see some gap ups, but you can also have some gap downs. So this one is going to move a lot. So I would imagine an option would be pretty expensive with, if you try to do that heading into earnings.
I was going to say, it seems like there's a lot of volatility on
A
in
lot
this
of
stock.
volatility. And there is this issue. There's still a lot of overhead resistance. So I'm glad you showed this thing, is that there's a lot of people who bought in the past 18 months or so, just to like, and let alone or before that. The people were disappointed. The growth has slowed, but it has turned profitable on an adjusted basis more often. So if it can't really do that, but there is overhead resistance with this one. So this one might get up to 52-week highs and then need to take a breather before really making a big run.
All right, Ed. Well, those are some of the big names on our radar, but let's go to the lightning round and take a look at a few more. Starting with Palo Alto Networks, the cybersecurity company reports on May 20th. I'm switching back over to the daily here. Here's another one in a cut base, 208.39 buy point. But again, this one also looks a little bit volatile here, like Snowflake.
It is a little volatile, and there seem to be better names in this group right now. Doesn't mean they can't become a leader again. It's sort of had an almost handle that it sort of cleared earlier in the week. Maybe it sets up another one. The 191 area, that was a resistance area. So it sort of was moving above that area. And there's been a lot of volume, even going way to the left. There was, just above 190 or so, there was a lot of trading. So that'll be important, not just for Palo Alto, but for the whole group. So it'll be an important report for that reason.
All right, well, let's take a look at Home Depot. They post earnings on May 20th. And again, we heard from Walmart this week. Home Depot reports next week, another big retailer people are going to be keeping their eyes on. This one in consolidation for 39.37 buy point, but in a downtrend, trying to rebound off those lows, Ed. But what are you interested here with Home Depot earnings?
I think we really want to see stuff about what they say about the economy with tariffs. I mean, there's 30% tariffs still on China. They have 25% tariffs on a lot of Canadian goods, where you get a lot of, Mexican goods. So there's a lot of goods that might be there. And some of those things also mean for housing. Just even if it's not Home Depot, there's those costs are also on there for that. So what are they seeing out there? It's not supposed to be great numbers. It's not supposed to be great numbers all fiscal year. That's a pretty big a part of the economy. It'd be nice to see how that's going. And same with Lowe's, which also reports. I mean, again, the earnings aren't supposed to be that good. And but that so it's Tuesday, Wednesday they'll report. Just get a sense of that. But these are not stocks that I think most investors would be looking at.
Right. Well, let's take a look at Ralph Lauren. They post results on May 22nd. This one in a cut base 289.33 buy point. But again, this one looking like in that no man's land there before results. But thoughts here, Ed?
Yeah, it'd be great if it formed a handle. It just hasn't done it. It's just not that kind of market right now. But this has been a strong performer, and a little bit like Urban Outfitters. They're showing some pretty solid growth. Maybe not that same level of Urban Outfitters, but some pretty solid growth. Revenue growth has picked up the last couple of quarters. So yeah.
All right, let's take a look at Qifu Technology. That is a Chinese fintech firm. They are scheduled to report results on May 19th. And let's pull up the chart here. This one in a cut base, 48.94 buy point. Thoughts here, Ed?
Yeah, they might have had a wafer thin handle on a weekly. I'm trying to remember if that's the case. that technically it got above. So technically last week's high was a offer there, but you could certainly see on a daily chart, maybe a handle will form on a daily chart. I'm not sure if there's enough time, but something close enough. So I think if it got above this week's highs, that would be a possible entry on earnings. Again, the China stocks haven't really taken off the way US stocks have on the release. So one could argue, and Alibaba had bad results, so it isn't a guarantee, but there are some things you could argue that maybe some of the China names will take off. I mean, maybe they'll really go if they have good earnings, because the tariff relief is definitely helping them. This one has, strong earnings growth. The revenue has just been okay. Relative strength line has had a strong uptrend until this base. So definitely one of the better performing China names. So definitely want to watch.
All right, well, let's wrap up with a recent IPO, Amer Sports. They have earnings due on May 20th. This was a recent IBD stock of the day, again, breaking out of a double bottom base with a 29.76 buy point. So how would you handle this one ahead of earnings?
Yeah, I mean, I don't think there's anything at this point that you can do until earnings, but this is interesting. Accelerating growth on revenue. I mean, some pretty big, I mean, earnings versus losses, so that's confusing, but it's supposed to be strong profit revenue growth. Want to hear about tariffs. You want to hear about that. They get a source, I'm sure, from a lot of they make Wilson, sporting equipment. There's a lot of sporting equipment and active wear kind of things. So in that whole sports arena, but they source it from overseas. So the tariffs, how are they handling it? Because those are still pretty high. I mean, that's still an issue for them. So that would be looking forward, but it's definitely worth watching. But I don't think you want to do anything ahead of time.
All right, Ed. Well, that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And thanks so much for watching, and we'll see you next week.